afternoon, good evening, good morning, whenever you're going to be watching this, and welcome to another Traders War Room number 74. I think I'm going to be so excited the day we get to War Room 100, right? So I do this once a week for you guys, preferably on Sundays, where I look at swing trader setups. But it's not just that, it's market momentum, market sentiment, fundamental aspects, where price is going and where can we get in. If there are bigger things to explain, I try and do that with the limited time that we have together, right? So this is what we're going to do today. We're going to have another cool war room. We're going to look at a couple of indices. We're going to look at a couple of crypto. And we're going to look at a lot of currency pairs, right? But today, unfortunately, my time is a little bit tight. So the war room will end as soon as my time is up for the next thing I'm supposed to be doing later on tonight. So I do apologize for that. But I do believe we can still get quite a bit done within an hour or so, give or take. We'll see how far, we can go. Right, I haven't said this to you out loud. Every day and every way, I'm getting better and better as a trader. This was a big affirmation that I asked you guys to kind of like get obsessed about almost 2 months ago, and then there was the 3 weeks where I wasn't around. I hope you didn't stop telling yourself this because I was not around. It's dangerous just to rely on me saying it to you. Remember, affirmations rebuild the deeper self, the inner self, the subconscious part of our brain that actually dominates our conscious actions. When you approach the markets on a day-to-day basis with the idea that you're going to make a lot of money, or you want to make money, or you're looking for opportunity, but the subconscious version of you does not believe in that idea. The subconscious version of you believes in poverty, believes in lack of resources, believes in debt, and believes in your circumstance. What happens is the subconscious, which pushes you on autopilot, will dominate the conscious, which means you have to implant that you are getting better every single time as a trader first, before you can actually become it. All right, so I've explained this many times, how it works and why it works, right? Just because I stopped saying it on the YouTube does not mean I stopped saying it to myself. My affirmations cards are my daily routine, whether I'm sick or not sick, trading or not trading. I remind myself of the trader that I am becoming on a continuous basis. I've been doing this for years, and I promise you it works wonders. The key is consistency. So one more time, every day in every way, I'm getting better and better as a trader. And you need to take steps, right? So this is one of them. The war rooms are one significant way to become better, right? Just simply attending war rooms, applying your mind to the stuff that I'm saying, seeing it for yourself, making critical adjustments during the week when I'm not around. Because at the end of the day, it's your account. I don't trade for you, I trade for me, right? I'm only going to look at about 15 assets today. There's over 100 trading instruments in the markets. All I'm trying to do is to equip you with the ability to have some type of analysis, right, where you can map out supply and demand levels on a consistent basis. That's all the war rooms are. All right, so I'm very excited, to bring this back, but I really hope that you guys have been, meditating upon it. Real quick, very quick announcement. The month of August is upon us, right? Tomorrow is the 1st of August, and I believe starting from tomorrow, there are going to be a few new and old things back on the channel, right? I've been hinting at this for a very long time. Number one, and for me, this is the most exciting thing. It talks about how you can become a better trader every single day. A couple of you guys have been asking me for it. I took time out. I stopped the podcast to focus on building module 3, right? So now that I'm done with that, finally, I am now putting that time back into the podcast. So the 365 Money Heist podcast is back. And our first reading is tomorrow, the 1st of August, right? So what do we do in the podcast? I simply read good books. You read good books, you do what the books are telling you, you become successful, right? Success is not a new thing. Success is not something that you need to create for yourself. There is a blueprint of success that the top 10%, and within that 10%, the top 5% practice. And that's all I do in the podcast. I bring you this information. I don't give you a summary of it. I don't give you the literal interpretation of it. No, in the podcast, I read for you every single word in every single chapter per episode. So it's a chapter a day. But, given my time, the podcast will run Monday to Friday every single day on our YouTube channel, and you can expect the videos between 6 and 7 a.m. so you can watch it while you're getting ready to go. You can have me, reading the stuff to you in the background. Most times, Saturday and Sunday, I will go crazy because I read other things outside what I'm doing for the podcast. Number one, number two, we've got things like the war room, so it's quite a lot. So please note, from tomorrow, 1st of August, the 365 Money House podcast is back. You can watch the actual video of me reading on YouTube, right? But you can also find us on Spotify and Anchor, all right? So that's where it will be. And if it's your first time, please ignore tomorrow's episode and start from the beginning, because we've already started this journey of going through critical, life-changing, money plus subconscious type of books that every single person needs to go through in life, but especially traders. If you're a trader, these money concepts are absolutely important. So I'll go back to episode 1, right? On our YouTube channel, you simply need to go through my playlist. You will see the Money Heist podcast, the 365 Money Heist podcast. Just start from the very beginning, right? Those of you who stopped with me last time were simply going to continue from Dr. Joseph Murphy's book. It's too far to show, right? And then we're just going to continue. So tomorrow, I might have to give you a quick recap to remind you about the first 2 chapters of that book before I abruptly stopped it. And then we'll just pick up, the pieces from there. Another fun thing that we're going to be bringing back or introducing in the month of August, and I just want to first of all apologize. This will not be public. I don't think it will be, or one of the 2 will not be public. And here I'm referring to my market openings, right? So I used to do a lot of market openings for you guys on the YouTube channel. That is, I would start a live stream for about an hour, tracking the London session. I don't mind doing that. Maybe do it for the first 2 weeks of August on the public, but I am moving my market open sessions for students only, right? For registered students only. It is the second half of the year. At the beginning of the year, I made a promise. I said I'm going to do as much as I can to make sure you guys are aware in the public, whether you're part of the internal 365 Trading Academy group or you just subscribe on our YouTube channel. So I've showed you guys the podcast. I've shown you scenario analysis. I've done war rooms with you. I'm going to keep doing content. But in the second part of the year, I have to give most of my time and attention to registered students, right? So market openings, maybe for the first week of August, just remind everybody what you're supposed to be doing. As an intraday trader, I'll put it up on YouTube. But after that, the second week of August, it will be students only. We're going to have a private Zoom call, maybe 3 times a week in the mornings. Those of you who can join us, and then if you can't join us, I will host those videos for you privately so that all students can get access to them, right? Because a lot of money, in that cycle of trading, those short-term supply and demand levels that I've been trying to push you guys to look up to. All right. So, and then the next thing is there will be midweek intraday setups. So we might find that both these are actually quite competitive, right? So we might do one or the other. Either we do market openings 3 times a week, Monday, Wednesday, Friday, or just on Wednesday, we do a full scenario analysis of my top 10 charts, right? So one of the 2, I'll make a final decision tomorrow. I'm actually going to allow the private students, the private Telegram group sometime tonight to actually vote which is better. One midweek intraday intensive session together, right, privately, or do you guys just want the market openings 2 or 3 times a week? To let me know. And then the last thing is about maybe now a week ago, I had an interesting one-on-one. So I finally finished sitting down with all my senior traders, right? I've got 109 6-figure traders in the academy. I managed to sit down with about 89 of them, right? The other ones are unavailable or not yet needing a one-on-one. So, it works either way with me. But those who requested one in the senior trading group, my last one was about 7 days ago. And my last one was a very, heartbreaking one-on-one session with a senior trader. Senior trader at 365 is someone who joins us, takes the course, and builds their capital into a 10-figure trading account, and then moves to quickly, to continuously elevate it over a period of a lot of time. Some of these guys have been with me since 2018. There was none of them an overnight success. I am not an overnight success. I do not produce overnight successes, right? But I can walk you through a process. But one of my senior traders unfortunately lost 67% of their trading capital, their trading account, an account that they've been growing for the last 4 years based off, I think it was about 9 bad trades. 9 bad trades, not that necessarily the trades were wrong, the risk management was off, the confidence, the trading psychology, there was a lot of weird things that were happening there, and it was important. I think what happened was so important for the specific trader to help them touch back with the realities of losing money. But it really urged me to kind of like make sure that I bring back one-on-one sessions. So one-on-one sessions are back from the month of August, and I'm going to explain how they work because they take up a lot of my time. And so there'll be specific days. I can only do one-on-ones. If you want a one-on-one with me on Thursdays, the whole day, I can open up the whole day Thursday, specific times on Friday, and only Saturday mornings, right? So it will be a very first come, first serve in terms of bookings, right? There'll be a link, you book, my team will confirm, and it just depends who you are. Are you a registered student? If you're a registered student, please remember that some of you still haven't used your free one-on-one session with me. All right, so some of you are still owed that. So my team will tell that, okay, you don't have to pay for this, it's completely for free. But if you're not a registered student, I'm pretty sure we're charging something silly. Like I went to the doctor, me and my husband was sick, and I realized doctors charge about 500 to 600 rands per session, you know. So I worked it out to about 350 rands slash about $20 for a one-on-one, for your first one-on-one. But it depends where you are in your journey, right? So some people already started booking. The link is actually on our Facebook, official Facebook page. If you want a one-on-one or one appointments there. So I've seen a couple of people already booked and paid, but some of them have never traded before, so I have to walk them through it. But if you're already trading, this is perfect for you because I'm going to ask you to send me your broker statement, right? Your broker statement is the most honest version of yourself as a trader. I can get to see your mistakes, but you can't send it to me at 9 a.m. If our one-on-one is at 10 a.m. I'm going to need about 48 hours to receive your broker statement, to review it before I sit down with you. All right, cool. So those are all the announcements that I just wanted to bring up, right? I'm very excited about this next stage of the year, right? Starting off with the month of August, the direction of the academy, and I'm just going to keep re-emphasizing a lot of these announcements, you know, as time goes by, right? But for the most part, all of this is to ensure that every day, in every way, you're getting better and better as a trader, right? So let's get cracking, ladies and gentlemen. Welcome once again to War Room number 75. There were just a couple of things I wanted to highlight. Now, this is the end of a crazy week in the market, specifically the Fed. Jerome Powell on Wednesday. If you haven't watched it, you should really watch it, even though it's happened already on the YouTube channel, on our channel, where it broke down the live commentary. A lot of things happened in that meeting. Powell said a lot of things. He also made sure not to say a lot of other things that the markets were expecting. And I just want to like quickly break a couple of things down for 5 minutes, then we can go deep into our charts for the week, right? So the main thing was obviously this past week got a 75% basis point rate hike. This was expected. There was actually a 73% expectation that the Fed was going to do this. And then the rest of the market thought, well, maybe we might get 100 basis point, and we didn't, right? We got what Powell promised was going to do in the previous meeting. But what you need to do now is to put all this information together right now. Why? Number one, we've got 8 weeks until the next FOMC meeting. That's a long time. That's 2 months before the next FOMC meeting. Markets are going to do whatever they want to do before the next time Powell comes back to increase the rates, not increase the rates. We don't even know what type of an economy we're going to be talking about. So what he then did was he gave us guiding principles, but they were very much packed in conversations. They were also packed in the Q&A. So I actually went back to really sit down and focus and listen to what happened in that Q&A. And I noticed a couple of things that I really want you guys to take, heed of. Number one, and I brought this up that night. He did say they have arrived at a neutral rate. What's a neutral rate? The neutral rate is where they want the interest rate technically to be, right? Interest now is about 2.50 after the 75 basis point rate hike this past Wednesday. They're now at a neutral rate. We know that inflation is rated at about 9.1%, but the experts, the financial market analysts, and the market, most importantly, the market believes inflation has peaked. By peaking, we mean inflation has finally arrived at its highest possible point, and now it can only come down from here. It can only come down from here. That's what they mean by peak. All right, that's very important. Now, given that we have 8 weeks before the next FOMC meeting, so there'll be no FOMC meeting in August, okay, that means we are going to need to look carefully at 2 sets of specific data times 2. That is, 2 CPI readings are going to be very important. 2, I think it's PCE or PEE or PCE, something like that. We can quickly confirm and check at some point, but I'll come back to this. Why? Because Powell said the market likes CPI, but as the FOMC, we focus on the PCE. I always forget the acronym, but the acronym, it basically looks at things from the producer end when looking at inflation, all right? And obviously 2 NFPs, because Powell kept hiding behind job growth. He said the economy is doing fine. Look at job numbers. There is no recession. Look at job numbers. Of course, the next day, the GDP data on Thursday came out telling us that we are definitely in a technical recession. All right, so Powell was wrong about the recession, but now the government is working overtime trying to redefine what is a recession. And there are many reasons behind that, but the truth of the matter is we're in a recession. I told you we're going to be in a recession as early as January, February, and it's happening. But despite all this bad news, the market still rallied. The market absolutely did well this week. The market did so well. This was NASDAQ 100's best week since 2020. Best Euro stock features, right? Euro stock features best week since November 2020. I'll double check my facts, but I'm pretty sure I'm correct. Right, so there's a lot of stuff going on, and I want to explain it to you now so that you start taking note of these things. Now, because they've arrived at a neutral rate, right? So here's the thing about increasing the interest rate. You increase the interest rate right now. So we went from 25 basis point, 50 basis point, 75 basis point, and another 75 basis point. That's what happened. But when you do that, the economy will fully feel the impact later, right? So it's a futuristic thing. You are trying to handle inflation, but you're setting these traps to pull it down. But the weight of the interest rate hike that Powell has done from March up until the month of July this year, the economy is still trying to contract and absorb and figure it out, and recession is here. Stocks are dropping. Stocks are now ready, right? We're going to see the full picture of what what this neutral arriving at this neutral rate has done to the economy. That makes sense. And so Powell did say these words. He didn't really say, well, remember, well, now we need to see, have we done too much? Have we done enough? And immediately after he said that, he said there is a possibility that we might start to see in the near future or the near term, right? Remember, 8 weeks from now is midterm in the markets. Short term is hours, right? Hours to a day. Midterm is always days to weeks, and 8 weeks is in the midterm. So he said in the short to midterm, we might start to see a reduction in Fed rates. So instead of getting 75 basis points in September, we might actually see the markets or Powell giving us a 50 basis point. What would this imply? A 50 basis point or a 25 basis point or a no rate hike in September would imply, number one, that inflation in July did peak. All right, that's number one. Number two, inflation is coming down, right? So which means number three, crisis averted, crisis avoided. 4, interest rates all the way to the neutral rate have done the job. There's been a sufficient reduction in demand in the market space. I'm going to get to signals. I know some of you just want me to talk about signals, right? But this is important. every day in every way. Some of you, your trading is terrible because you don't know what you're doing. You have no clue. You're using all the types of strategies. So listen to what I'm saying. Some of you are just bad at risk management. You've mastered the supply and demand, but you're still bad at risk management. Some of you don't know how all the pieces fit together. So this is very important. Please bear with me. Stay focused with me. I'm almost done. I'm watching time because I know I need to go early today. So I will get to the signals. But this is important because the markets you're trading in tomorrow, Monday, the market for the rest of the month of July and now August, that market is priced in this stuff that I'm telling you. Markets price in everything, right? And that market that you're going to deal with this week on indices, gold, and currencies, and crypto is pricing in what we're saying, all right? So you need to understand this. Now, Powell then said, look, in the future, short to medium term future, there's a high chance, sorry, I'm looking for my water. There's a high chance that we're actually going to start to see a reduction immediately. Just so you know, that is bullish because the FOMC is saying, I don't have to keep giving you guys this very big rate hikes, which are the reason why the stock market fell even more, even though the stock market had already been falling since December last year, right? It became a massive catalyst. So by me saying I'm going to start reducing those rate hikes, I am confirming that inflation is now coming down. But remember, what did I say? The data. We guys follow the data, not politicians. Follow the data, not TikTok. Follow the data. We need to see a consecutive drop of inflation in CPI. So what could happen, and it's happened before, is we're 9.1 in July. And then all of a sudden, we're going to get, I don't know, 8.6 in August. I'm making these numbers up, or at least the August number. And this is going to be like, wow, inflation is coming down. Markets are going to go bullish in terms of stocks. Dollars going to keep falling, blah, blah, blah. And then come September, surprise, surprise, back to 9.3%. Be very careful of this, right? You need to simulate the data, but you need to move, per data set, guided by your supply and demand. And this is a perfect time. I mean, I say this with no shame, and it's very important. I am honest with you right now. Thank you for coming to the war rooms. Please don't forget to like the video. But war rooms are not enough for your trading. If you are relying, if you're not a registered student and you just come into the channel every Sunday, and I appreciate the compliments, I appreciate the love, war rooms are not enough. I'm here to give you clean guidance for the week. But you need to become a trader when you're now by yourself during the week. So please hit the link down below and take the full supply and demand course. Let me show you why. Let me just give you a quick example right now of why I'm saying this. Because I was looking at this chart yesterday. Sharing the right screen, wrong screen, I don't know. You guys should be seeing chart in front of you, right? So that's screen 3. All right, so let's go to screen 3. Right, so look at this. Look at this. This is pound USD. You know pound USD. We spoke about pound USD last week, right? This is my intraday chart setup. But let's go back to the war room chart that we did together on last week, Sunday. Right, so it's war room 72, right? So we are anticipating that pound USD is going to get to somewhere at this level, according to our war room, and then drop back down, right? This is what we said last week, Sunday. And you can see the whole week, pound USD was bullish, which is what we said was going to happen. And now we're in an interesting place of selling, right? You can see I am very much interested in selling all the way up there for now. But it's neither here nor there for now. Let's ignore that, right? Because that's a swing position. Now, in a war room, I'll say something like this, right? Beautiful supply, unmitigated imbalance, nice place to sell. We are here, today's Sunday, right? Which means you need to be patient. You need to wait for all of this to happen. And there's a probability that it might not happen this week. It might happen next week, right? Markets could fall instead from this level. Now, as a swing trader, I can't really rush to take the immediate supply when I know there's a better, higher supply because it's a higher risk. Number one, I want to take high probability setups, okay? So if you're only attending war rooms, you have to wait for us here, okay? This is very important. I want you to get, this is a trade signal, right? And you can see it's still up. You can see even after 1 week, markets still haven't arrived here, which means you're not making money if this is all you're relying on. Now, as an intraday trader, all right, or someone with an inherent understanding of supply and demand, this is the next thing you're going to do. You're going to have to investigate this level that I call high risk. High risk for swings, but it doesn't mean you can't make money in it tomorrow, right? Because you could still take a trade in here if you know what you're doing. Now, I can't do swing trading and intraday trading on a Sunday on a live stream. Number one, we'll be here for 6 hours. But number two, there won't be a distinct benefit that registered students get and the general public. So I'm encouraging you, please, to look up that link and actually invest in yourself. Now, let's look at pound USD on my intraday charts, right? The market opening charts that are a scenario and that stuff I've been telling you guys to kind of like, investigate, right? I'm going to go straight to the 1 hour time frame. Now, if I show up to you now and I have to do a war room on intraday trading, you can see my chart is already marked up. There was a beautiful trade here, a 15 minutes demand that worked out so well. Very clean, beautiful trade on Friday. Very clean, good money, right? Clean as a whistle on the 15 minutes time frame, compounded by that 1 hour analysis that I've taught you guys for, right? On YouTube, on those EURUSD scenario analysis videos, right? I'm moving all of this now to private students. This is what I'm saying. We'll be taking these day signals all the time, right? For free, right? All you have to do is just register for the course, man. That's all. Everything else comes to you for free, right? Now, but look at this. What would you do tomorrow? Because the war room isn't going to cover this, right? I've got some form of liquidity grab right here on the 1 hour time frame. Very nice, very clean. Markets, left, but they're bouncing. But I've got green candles. So this is how markets close. Above, right? And one could try to draw the supply like this, right? I wouldn't be mad at them. Then one could draw the area of competition like that. All right, right. So one could make the argument, but Leroy, we could try and sell there. But look carefully. Look at the imbalance. Is that the one that we like? No, it's not. Right. So for me, I'm not looking at the 1 hour supply. I'm looking at something a little bit more tighter, a refined zone, which is the 15-minute supply inside that whole structure. But the 15-minute supply provides a trap, right? Which is something I can't predict in a war room. It's stuff that you need to master in your supply and demand journey with the tools I'm going to give you from module 1 into module 3. Because as we can see here clearly, right, equal highs, sometimes liquidity entrapment or sometimes liquidity grab. And one could venture into the possibility of wanting to sell there. But I'm not going to rush into that because my intraday trading is based around my scenario analysis. And so I need to see where and why the London session on Monday tomorrow opens the way it does. As a day trader, that's very important to my trading strategy. You won't get that stuff from war room. Right. Now, if tomorrow, for example, our price was to, in the Asian session, so from midnight when markets open while I'm asleep, and markets were to go all the way down. So push down and maybe break structure, for example. So let's say we get some type of break of structure here. I would be absolutely confident only then to put a pending order in this 15-minute supply. Because now I know that markets have broken structure to the downside. They have cleared liquidity, right? Trapped all the retail traders, taken that money, and now all I need them to do is to come mitigate a fresh area, a fresh supply on the 15 minutes time frame. And this could make me a lot of money. I mean, I made about 400 and something US dollars going up here based on my lot size. So what more coming down? So between Friday and say Monday, Tuesday on this chart, I could be up 1,000 US dollars. Okay, you get that. But I can't make that trade right now, and I can't give that signal in a war room setting. Because in a war room setting, I have to give you guys big picture and swing trade so you can come back to them week after week. But if this doesn't happen, for example, and instead during the Asian session, right, in the middle of the night, at midnight up until 9 a.m., markets move up, push to the higher side, I cannot take this 15-minute supply. Because there's a very high chance I am going to be burned. It's only in the 15-minute time frame. If we look at the bigger picture, let's start back now from our 1 hour time frame. See this 1 hour time frame? We didn't get this perfect imbalance. If you don't know what that means, I can't teach it right now. You gotta take the course, right? There's a whole 4-hour lecture series on imbalances, areas of value, different types of supplies and demands. Right, that's rule number 1. Rule number 4, I checked this out. If you look on the H4 time frame, markets don't perfectly hit this. Right, so there's a higher supply, the higher the time frames you go. Right, if you really look at this beautiful, beautiful setup, beautiful imbalance, but if you really look carefully, it's not mitigated. It's really not mitigated. You can see, you know, I'm going to remove my vertical axis there. See, the wick ends somewhere here. I hope you guys can see this, man. I hope my point is clear, right? And this was a 9 a.m. opening, right? Somewhere in there. This is H4, but if you go to the 1 hour time frame, 9 a.m. London session opening, that's what happened. So because of that, the movement, my point is the movement in the micro, in the 15 minutes, price pushes up in the agent session. I can't sell there because I then need to wait and see, right? Markets might want to spend the next 2 days trying to make it back to that H4 supply. But if markets on the smaller time frames break supply, break structure, sorry, I can take a high probability sell trade on that 15-minute supply. I can't channel all that type of information in a war room, right? So that's why I'm saying you want, for the second half of the year, you want to be a private student, because this is the kind of stuff I'll be dealing with them, right? We're literally going to have non-YouTube sessions week after week up until everybody gets this right? So just really take my charts back. Take my charts back to how they are, and then we move on, right? So intraday setups plus swing setups. You need to understand the market at a very micro and macro level. The other way that we explain this in the course is quite simple. We say price is fractal. There's fractality in price, right? Different time frames, same price movement, etc., etc. Right. So please be very mindful of this, right? So be very mindful of this data setups here that are going to come, because that is what the markets are pricing in right now. That markets have peaked, blah, 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 that the Fed has arrived at a neutral rate, and more importantly, will most likely start to reduce future Fed fund rates. We don't know if it's true, but it's what Powell said. And so we call this the Powell curve, right? The power of Powell's words. Markets are like, yo, inflation has peaked, and Powell is saying, look, man, we might actually start to reduce rates. So that's good news for the markets all around. And that's why this last, from Wednesday, Thursday, Friday, markets were absolutely crazy. Bitcoin is crawling back to that 28,500 way. It's because of that particular news, because markets believe, and this is the last thing I want to teach on today, because it's absolutely important. Markets believe they have arrived at a technical bottom. We've seen a couple of technical bottoms. You saw me predict the 14th to the 15th of March bottom in the markets. And I want to explain how I do it today so that you can start to understand it. On the 14th to the 15th of March 2020, I predicted that in February on Valentine's Day. I said 30 days from now, there's going to be a market bottom. And that was because on the 14th to the 15th, if you go back to the Forex calendar, there was the first Fed chair meeting where Powell increased interest rate by 25%. Now, fundamental Forex will tell you that if you increase the interest rate, you strengthen the dollar, but you have to weaken equities. So equities, Nasdaq, stocks will fall. And that happened later on. But at the announcement of that 25 basis point in March, markets rallied for about 2 weeks. So there's a golden boom rush in the middle of a war and all sorts of things. Now, these technical bottoms that I'm referring to are created when the Fed U-turns. When the Federal Reserve, the FOMC, U-turns its decision. Where it's like, we need to increase rates 25 basis point, 50 basis point, 75 basis point, another 75 basis point. This was a clear path for the stock market to price in a decline, all right? Literally, markets have been falling since March up until July. But every time there is a Fed U-turn, when markets are like, we've received enough pain, can you U-turn? And the U-turn is what I've just explained. When they say, look, we've arrived at a neutral rate, look, most likely the next rates are going to be actually reduced. This is called a U-turn. A Fed U-turn always creates a technical bottom. Now, there's a difference, folks, in a technical bottom and a bottom. For me, as a supply and demand trader, I want to be very clear, because technical bottoms of March lasted for 2 weeks and the stock market fell for 3 months after that. All right. So technical bottoms are nice if you're an investor because you get to buy the dip. Technical bottoms make the perfect dips. So I keep dollar cost averaging into my crypto there. I haven't released a new stock financial notes because right now I'm just busy on my classics. The moment I see clarity in altcoins, I will release one, I promise you. But right now, all our money should be going to something we are absolutely guaranteed will be here 10 years from now. All right, and that's just how I work. And these technical bottoms create the perfect dips for the future. Now, when the Fed U-turns, and it feels like they have right now, markets generally have always bottomed. And for those of you who are a big fan of economic history, like myself, I'll let you know the big crucial ones. There have been several economic bottoms, right? There was the big one in 1989. In 1989, by the way, this is the most important one. Those of you who don't know, before I moved to finance, I actually started my first degree was in law, right? I'm actually supposed to be a lawyer. That's what my old man wanted me to be. That's what he wanted me to come to university. That's what I did. Then I moved into industrial economical sociology. But in 1989, there was a precedent, right? That's why I'm bringing up the legal stuff. There was a market precedent created by the Fed, an unwritten law. It was the first time the Federal Reserve in 1989 bailed out the markets, where the Federal Reserve comes and says, we're going to wear our Superman hat and we're going to bail out the markets. Ever since that timeline, right, of this type of situation where the Fed bails out the markets, we have seen plenty of the same scenarios. 2003 March, there was a technical bottom created by the Fed. After the 2007 financial crisis, in March of 2009, there was a technical bottoming of the Fed, where the Fed came to save the day. The short-term financial crisis in 2018 December. You can go to your charts. You know what? Let's go to the charts quickly. I mean, you need to learn. You need to learn this stuff. I'm going to go to your favorite chart. I'm going to go to NASDAQ. In case they say I'm making this stuff up, because you know that we know. Let me just use my chart, my NASDAQ chart. It's just that I don't like using it because it's got so many lines. But I hope this has made sense to you guys. We're about to get to that second part of the war room where I'll be giving you guys signals. Don't worry. Let's see if we can spot it on the monthly time frame so that we don't have a lot of time. We'll see this bullish engulfing candle now on NASDAQ, right? And again, I did say, you know, no matter what happens, NASDAQ will come all the way down here. And here's to hoping it will come back to these March COVID levels. But you can see now we've got a bullish engulfing candle here on the governing time frame. But the war is not over for people like us. The war is not over, right? So just be mindful of that supply up here. The supply there is telling. The supply up here is interesting. We'll see where the money is, right? Only time will tell. Right, now, let's go back to what I was saying. Remember, I was telling you guys that this is the March 2020 technical bottom. The next one was December 2018. Remember that? October, November, December. You guys can see it for yourselves. I just want you to see that even though I know stuff at the top of my head, I'm not making it up. There it is there. Technical bottom. See this there? See there? December 2018. Now, watch how the December 2018 technical bottom, the Fed leaves enough money to save the market in March 2020 during the COVID crisis. So my thinking is, all right, if there is a Fed U-turn in 2018 and there's another financial crisis in 2020, and the Fed uses that demand from 2018, creating a demand here in 2020, those orders need to get filled. I don't know when, but I believe they absolutely need to get filled. And now we know for a fact that I was not smoking weed in February. We are now officially in a technical recession, right? So I'm just saying there are technical bottoms, but all technical bottoms. Imagine this: from 2018 to 2019 to 2020, the markets fell all the way back to those 2018 levels. Markets did not care. Yes, technical bottom, but we got to mitigate the demand, all right, and so forth, right? March of 2009, you guys know that crisis very well, etc. You just study your chart. The stuff is there, right? So this is my message to you: is There is a technical bottom. That's why markets are kind of rallying right now, because markets have priced in, that, potentially the West is over, all right? And I don't know if that is true, right? I'll track the data with you on the YouTube channel, 2 CPIs, 2 PCEs, and 2 NFPs, all right? Okay, woo, we're done. I promise you, we are now done. The only announcement that I have for you, by the way, is please, 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 I missed this on Friday. I messed up big time on Friday. I forgot to set a take profit. Please take profit on natural gas. If you're a Warren 365 subscriber and you follow this channel quite religiously, I'll let you know quickly on my trading journal, because I realized that column was empty, and that's because money was still running, but I still had not actually taken profits. And we spoke about natural gas a very long time ago, at a time where it was quite a high-profile asset to buy into because of the war. Oil was going crazy, gas was going crazy. We spotted a demand, and that demand only got hit in July, right? So we only got triggered. If you're with me in this trade, you only got triggered sometime this month in July. Where? I'm just trying to see. Just give me 2 seconds. That's London session. Jeez, we literally pointed out a long time. So it's Forum 54 and Forum 53. We spoke a lot about natural gas, and in the early Forum 60s, in the 60 numbers, right? So please take profit on natural gas. I just want to quickly show you what I mean. I didn't do it on Friday, so that's the only reason why I'm going to stay up tonight. As soon as the markets open at midnight, I will then close this trade, right? But natural gas, for me, I think has run its course. We're now in a tight supply. All right. I hope you can see the screen that I'm sharing here. Go to natural gas real quick. Right. So we pointed out this demand down, and then go to the daily time frame so it makes sense to you. There you go. Right. So this was a very beautiful trade. Easy money. But we pointed this out on the YouTube channel live like today. Markets came in beautifully. I got tagged right there just at the end of June into July. But then my second buy order right on the 3rd or 4th of July, and we were supposed to come out on Wednesday. All right, to be honest with you, I mean, some of you might have been wiser than me and put a good take profit figure, right? But this is not a strong supply, but it's a perfect time to get out. Why? Well, because natural gas is at an all-time high, or has been an all-time high for a very long time. All right, or actually, sorry, it's now within a good supply. It's not at an all-time high, but it's within a good supply. This arrow here is what I'm pointing to. Sorry about that. Right, and anything goes. When price gets to these high levels right now, it's safe to assume that you might get some type of selling pressure. The selling pressure might not last forever, but this is not the type of trade you want to hold for over a month right now, because we don't have that confluency with the weekly demand and governing demand, and so because of that, markets are allowed to drop. Right, there is a scenario where natural gas will only drop to this level and then continue all the way up, but it's not something I'm willing to gamble. What I did do was pull up my Fibonacci, and I realized that there's a very big scenario that this drop could be considered just a healthy retracement into that 50% to 61.8% golden ratio area. There is a daily demand there, but again, we're literally living off the daily on this chart and not anything higher. So my words and my advice to you, not that you take financial advice from me, but what I'm going to do as soon as markets open today is to really dial this whole thing back. Maybe see what's going on the 2-hour time frame, 1-hour time frame, and see. So if you don't want to close, right, which I don't understand why you not want to close, at least lock profits under this level right there, because I promise you, I suspect more sell pressure is coming. I mean, you can see this for yourself, man. Sometimes you just have to follow simple logic, right? Markets are starting to print, lower highs, right? When you start to print lower highs, you're in a downtrend. So get out. This is good money that we made. It's a 1 month, holding trade. So please take profits from natural gas, because I forgot on Friday. I got distracted or whatever. Right. So now let's look at NASDAQ, folks. Our first chart for the day. I am done with the teaching, the intros, the announcements. I mean, I'm not really a good salesman, but I absolutely encourage you to jump on the 365 Trading Academy course. because the benefits outweigh, whatever it is that you're paying. In fact, the course is completely underpriced, by the way. But what the drills that most private students are about to get into between now and the end of the year, most of you will not experience that stuff on the YouTube channel, right? But I will be here, but we need to work on people's accounts, right, to avoid, the stuff that I saw with one of my senior traders, right? You live and you learn, right? There's the NASDAQ daily chart. Everything, just literally after telling you what I've just told you, markets, found a technical bottom, and this is the technical bottom, by the way, with the Fed. This is the best week for NASDAQ since 2020, literally, in terms of volume, buy power, breaking of supplies, etc., etc. There's that weird head and shoulders pattern. There's that beautiful fall from it. Markets right now are not looking to react to anything on the left. And now we wait to see what's going to happen here. Now, full disclosure, because it's important I tell you this stuff. I've told you that the markets are quite bullish right now. I've told you that the markets believe that, inflation has peaked. I've told you that the markets also believe that in the future, power is going to come back with less aggressive interest rate hikes. The markets are basically extremely bullish. I've also taught and told you that we're technically in a technical bottom that is created by the Fed. And when a technical bottom is created by the Fed, it must be sustained by the Fed until it serves no purpose. Despite all that information, personally for me and my trading account and for my trading flow, so for my corporate clients, I haven't changed. All right, I'm still bearish. There isn't a single part of me that has decided to join the bandwagon. And that's a decision you're going to have to come to by yourself as a trader, because I could be completely wrong. And 2 months from now, I'm going to be like, oh, guys, I'm so sorry I was wrong. As an investor, it shouldn't matter, right? All these dips, you should be investing dollar cost average. But as a trader, timing is everything. So as a trader, I'm pumping the brakes because I've seen the market do this. You see this thing here? Look at this. This is that bottom I'm talking about, 14th to the 15th of March. See this there? This is not new for the markets. Markets can create beautiful, bullish rallies and then fall for months. Right, we call this a bear rally. Now, I need to see more from the markets. For example, I need this gone. I need the bulls to take out this, and then I need markets to come all the way up there. And when the markets do all of that stuff, sure, if they remove this daily supply, I'll look for buys down here, absolutely, to make money. I'm not going to sleep on that opportunity. But my thesis, my macro thesis is we're in a recession, bro. All right. And, we still haven't seen the impact of the Fed rate hikes. Correct? Powell is very correct about that. We still don't know if we can maintain job numbers after this neutral rate actually sets foot inside the economy and starts to contract the economy and starts to pull inflation. We still really don't know. So during the not knowing period, I'm going to maintain, a bearish tone. It doesn't mean I'm going to be trying to sell every time markets get to a supply. I'm simply saying my widths haven't changed, right? I'm going to watch the movement of the markets. But a good thing to wait for here if you want to buy NASDAQ is really to come back and camp at these levels. And that's about 12,300, 12,400, 12,200, and 12,100, right? I believe something beautiful might happen there, right? And here's the hope that this will happen. For those of us who are fully sold on this technical bottom argument, right? There's hope for some serious money there, whether you're selling from there to down there or buying all the way up into that, right? But we'll see how this cluster holds, over time, the next week or two. If you move NASDAQ 100 into the weekly time frame, you will see why, right? The likelihood of price breaking and going to the upside might be slightly high. And the main reason for that is there's just no confluence. All right, this weekly time frame is butt naked, okay? And because it's butt naked, right, markets can push up to the upside. Markets can push to the upside for a while, right? Literally looking at a buy right now. If you're into these buys and you're right up at the technical bottom, I would hold these buys all the way to about 14,600, right? 14,600, 14,700, 14,500 on the NASDAQ, which is really, really profoundly good money, right? Technically speaking, prices on the other side of a structure. Technically speaking, markets are reacting on an governing demand, right? Markets set on a demand. Markets, consolidated just above it, creating those PCP, potential continuation patterns, and now markets are moving up. So I wouldn't be mad at anyone who's trying to buy the NASDAQ. All I'm asking is please be smart about your wits. Be smart about the type of trade setups you are looking for, right? So on the daily, I've shown you guys, 12,300, 12,400, 12,200, those type of levels. And if you look carefully now, dropping down to the H4 time frame, you will see that markets really do need to come back to these areas, right? But it's a waiting game. Markets could do whatever they want, but the main thing is 13,200. There's a lot of supply. So if you're doing any type of buying, please don't buy inside this gray area, right? That's number one. Number two, there were most short squeezes were eliminated in the market this week. And what that means is most people who had their money in options and trading calls, etc., who believe that price must fall because we are in a recession, all those short squeezes happened. So bulls basically burnt through all those sellers, right? So all those sellers lost money this past week. And what that means is people always assume that it's now time to keep going up. But it also means smart money now knows that no one is expecting the price to come back down, which creates a perfect sell opportunity for smart money, right? So this area for me is absolutely important, and I'm really referring to the highs within that gray area, the 13,400-ish area. That's where you should expect some very, very strong supply, which could turn this whole thing around, right? So if you're buying, buy wise. Don't buy very close to the supply. It would be nice to get a big pullback, even of a break of a structure all the way down here. But yeah, each to their own. The next chart that we want to look at is the S&P 500. Which I know I have somewhere. There we go. Got about 45 minutes left with time. Okay. So you can see S&P 500 has arrived. See, NASDAQ is just like it, just above the gray area. But for me, S&P 500 has arrived at a significant sell area, which was printed a while back. This was the main reason why S&P 500 eventually fell below 20%, which then officially made S&P 500 into a bear market, right? Now, this is what you're going to want to look for, because you're going to want to see the first market that moves first. NASDAQ hasn't arrived at a supply. S&P 500 has arrived at a significant supply. I'm not in the trade. I would suggest you don't trade it. Mirror it. See where it goes. See how it reacts to that supply, and then go do the same thing on NASDAQ or US 30 or both. And the reason for that is, Friday closed quite strong inside, but we are in a supply. We could get a short-term movement of that particular supply. That will be from this supply all the way down here, and then markets continue to go up. Or we could get, this whole area just being removed. So markets being so parabolic, so high on the good news, high on the technical bottom, high on what the Fed is doing, etc. So it's going to continue. Right. If you were looking for trading opportunities on this chart, and I really hope I've been sharing my screen this entire time, it's something that I'm absolutely paranoid about. Yes, I am. Okay, I apologize. Right. So now, if you're looking for some opportunities on S&P 500, you're trying to figure out, once again, if you're a big technical bottom believer, or you're just like assessing the situation, you believe it'll be best to buy instead of selling, this is the only place to buy on the S&P 500, which means you need to wait for markets to drop, right? And then if you're dropping with the markets, be very mindful. Now, this sell on the S&P 500 is just below the actual sell on NASDAQ. So I'll say this again. This area here is the NASDAQ gray area, right? But there was this weird sell that S&P 500 created by itself right there. But this whole area here is that significant supply level on the NASDAQ on the daily marked in gray, right? Why is this important? Because normally when you have supply stacked on top of a supply, markets have a tendency to break the first supply and literally go right down to the other side, right? So markets might be setting up a trap for people to start selling here. Markets blow their stop losses, etc., etc. Then markets adopt strength, stop somewhere right here on or in this particular area here. So these two supplies are levels to watch for this coming week. And I think that's going to be very interesting, given that this week, Friday is the 5th of August. So we've got NFP. We've got the very first report that Powell wants to see before Fed fund rates in September, right? So NFP data on Fridays are going to be a big deal. Are we going to get strong job numbers? Are we going to get a reduction in unemployment? Has the neutral rate started to suffocate companies so much so that they are firing people? We're going to see these massive layoffs continue. That's the question here, right? So that's that, right? Then let's have a look at US 30, because I just want to really get a good feel of all these different titans of industry in the market. Just bear with me for 2 seconds while I find it for you. There we go. Right, US 30 climbing well, very good distribution all the way to the supply. The supply is the very first type of supply, still hasn't made it into the main supply that's mirroring the NASDAQ gray level, that's mirroring that S&P 500 just above. And so you might get the same thing. My point is, you know, it would be nice if you learned patience and took the time to actually watch some of these levels out. Because if you understand how these levels play, you know, you would be in a very, 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 very lucrative position. Because these levels operate continuously after major action, right? So let me say that again. I apologize. These levels, these ones, the one that was gray on NASDAQ, I'm going to mark it gray here so it makes sense. I can feel like I'm rambling. Right now, these levels work best when these ones fail. And these ones fail because you always sell high, buy low. So these levels sometimes act as a trap. And so if there's a trap here and you start to sell too early, you could be in trouble. Right. So what I would do if I was trading is I would have to wait to see if this is going to hold, because 1, 2 supplies could both be blown out of the water if that technical bottom bias is strong. And if markets do come back down, and let's say I miss the sell, then definitely don't miss the buy. And that's what this chart is, to me, suggesting, right? So we've got a buy area there, we've got strong sell zones there, definitely high risk, definitely better option. That makes sense. Right, so that's US 30. Right, the next chart that we need to talk about is Bitcoin. Bitcoin back from the dead. Every time Bitcoin makes a move plus 5%, the whole world thinks, yeah, we're going back to the moon now, which is really not how that works. Well, Bitcoin's about $23,700 right now, slowly but surely moving. Right, so I wrote this on Wednesday during the live stream. I said, look, man, this crazy imbalance here can be filled back to 28,500, sorry. And you can see that's exactly what markets have been doing. Markets have been slowly but surely working on a plan to fill this order by rising and rising. But this is my favorite thing to do on Bitcoin, right? So I can draw some type of rising arrow. This is basically a rising wedge, some type of rising pattern. Why do you say it's rising? It's pointing to the upside. Why is it pointing to the upside? Because every time markets make a low, they make a higher low, right? So that's absolutely important. And this pattern, if you look at Bitcoin very carefully, is ridiculously known for creating downtrends, right? Now I'm trying to show you. There we go. Here's let's make this big. See this wedge pattern here? Prices going up is the exact same thing we had up here, right? This blue line, where I kept saying, no matter what, markets are going to come to 30,000. People are like, no, you're crazy. This blue wedge line here, I marked it in blue. It's my favorite thing to look out for on Bitcoin, because when I get this on Bitcoin, I am almost sure that there's a setup in place. It's coming, right? And so what I start to do is I start to identify the supply, because what happens is you can see here, right? Markets keep moving up, creating higher lows, etc., etc. But there was this key moment that I'll never forget, this beautiful trade this year, where it matched with the so-called upward trend that was being created, but it also aligned with the perfect supply. And once you get a trade in that supply, hold that thing, it's coming down. And that's what gave birth to a complete collapse and a meltdown of Bitcoin, right? And when there's a downward wedge, markets explode to the upside. So now I'm starting to realize, hey, this is interesting, right? We've got a new uppity dip. And I remember teaching on this, by the way, on the YouTube channel, right? So I'll be mindful of this, by the way. I really would be mindful of something like this, because however this whole thing works out, eventually it's going to have to work out, right? So, and the second thing I want to caution you guys about is the fact that, remember I told you that my honest take is I am not bullish in this market, right? I understand the technical bottoms, I understand what the FOMC is trying to do and their power, but I am not sold on it, number one. Number two, the exact area, which is 28,500, is littered and prescribed and locked in as a resistance, all right? A lot of retail traders are hoping to take shots here, like they believe this is a resistance point, which means most of their stop losses are here. Most of retail stop losses are just above their entry, because that's how they're taught to trade. And I noticed that just above everywhere where every retail trader is going to keep their stop loss, just above that area was actual real supplies, which means there's a high chance that the markets will stop out every single person here and make everyone poor and take everyone's money before it arrives at a at a significant supply above, and then sell from there, right? So please be very mindful of that, right? Word to the wise, be very mindful of that, how you treat the 28,500 versus how you actually need to trade the supply above it is important. But these are going to be key areas to look out for in the actual near future. But this raise and wedge pattern right there is absolutely inspiring. It does wonders. So just be mindful that I think we've got a long, steady, choppy pace to the upside for Bitcoin. But I don't think we've got a technical bottom in place. I don't think Bitcoin has found its bottom. I don't think NASDAQ has found its bottom. I don't think these markets have found their bottom. I think we're going to see further decline in the future. But most gurus right now believe that the second half of the year is going to be very prosperous. Things are going to be doing very well, and we shall see. All right, so that's Bitcoin. And just in terms of what I want to do as a trader, in terms of trading, because I know if I just talk theoretically, people are going to want to know what is it that I'm doing. Okay, for the most part, waiting. Right, there's really not much to do unless if I catch a very clean demand type of trade somewhere here. But for the most part, not even that. I just want to wait until my supply aligns with where I want price to go. Okay. Then the next trade that we need to look at, or chart, sorry, is Ethereum. Ethereum has done very well. Many announcements, many things going on in the Ethereum, community. I'm going to use it my Instagram page because there's just not enough time in this war room. So my Instagram page, I'll give you guys the micro details, 30-second details around. Why is Ethereum doing well today? What are these updates in different crypto clusters, Forex clusters, etc., etc. I'm going to start doing a lot of short videos, day-to-day stuff. So please do find me on Instagram. I'm not really that much of a social media, type of person, but this is my social media handle, MAISIRIL, right? It's Leroy My Siri. Okay, that's why I am on Instagram. Find me because I wish I could have broken down the multiple reasons why a big tsunami is coming in Ethereum, a very big good tsunami. I love Ethereum for a lot of reasons. But find me on Instagram. That's my Instagram handle, and then you'll catch up these updates. Now with Ethereum though, 1.8 is that significant resistance level for retail traders, and we like to know these things about retail traders. We like to know where their money is so we can go get it. All right. And I'm bringing it up right now because that's where a lot of people are waiting. A lot of people. Let me just show you where the 1.8 mark is. Right, somewhere here. And not only is there resistance, but one could argue that there was a beautiful supply strategically sitting on it. Right, so this whole zone here is a mess, but very much so more like this one. When you look at the type of imbalance that exists there, it's brilliant. It's absolutely brilliant. Now, as a trader, You know, I've bought in a lot of ETH down here. This double bottoms were beautiful for dollar cost averaging. But as a trader, my temptation, I won't even lie to you, the temptation to try and sell from this level is very high. But my instincts tell me to just wait and see. Number one, why would Ethereum fall, you know, very violently while Bitcoin is going all the way up, right? I know these markets are quite linked, but to see that type of, you know, discorrelation is very rare. All right, so I would watch out for some type of activity, you know, up there. I'm gonna sit out of the sell this time around. I'm gonna sit out of the sell until I see what's going on, right? But if you move to Ethereum's weekly time frame, you realize that, you know, we are really in shock. Or in need of a governing supply or weekly supply, because the next supplies are all the way at the top. You see that upward move? I'm just going to make this line blue, right? The one that I just showed you on Bitcoin on the daily time frame. Just to watch out for these patterns, because when they come facing to the upside, price always breaks to the downside, right? This is literally scenario analysis, like time and time again. When you start to see this going up, high lows, you need to locate a very good healthy supply that is going to help you push price down, right? And that this one, unfortunately, probably I would have been stopped out, didn't work, but nonetheless did a very good job at what it's supposed to do. And you can see markets then had a rejection on that upper band and then fell right through, right? And so this is the supply that, technically speaking, I am gunning for this unfilled. It's on the daily time frame. It's within this rising wedge, which would mean, right, markets have not really come back to test this, right? So you want markets to test this thing, something like that, right? So I am keeping my eye out for that. But right now, as it stands, there's just too much competition where Ethereum is between retail traders and where price needs to go. And so somewhere in here is the formula of getting burnt. And you can see there's another supply right above that area. So these two supplies will get my pending orders. If I get burnt here, it's fine. I'll make the money up when I get into this area here, right? Am I in any Ethereum buys? Unfortunately, not trading buys right now. I just bought more Ethereum a long time ago down here. Not even a long time ago. This is literally this month, July, right? The beginning of the month of July, end of month of June, where dollar cost average. Again, tomorrow is the first of a new month. I'm going to be dollar cost and average into all my financial instruments that I've given out in the Wealthy in 3 years program. And then we shall see where this takes us, right? So some could argue for something like this. If you're one of those people, I'm not endorsing the idea. I'm just saying I can see what you think you're seeing, right? But just be very careful is what I'm saying. Be very, very careful with this particular chart, right? Then we move to my favorite, thing to trade, and it's also my campus in the market, which is the dollar. The dollar, as we predicted in the previous war room, and I've brought it up many times, that they're taking longs. I wrote this down for you for the COT data, right? Slowing down on longs because they're taking profits. They were taking profits. Then the Fed came and increased the interest rate, but the dollar didn't go up because the dollar was in a supply. This is what I'm saying. War rooms are not enough. You need to know this others, the rules, right? The fundamental traders will tell you if an interest rate goes up, markets, the currency must be strong. The dollar kept falling throughout the Fed meeting on Wednesday, kept falling on Thursday, kept falling on Friday. And the reason for that is it's not Powell in charge there. There's a governing supply. There was already a premeditation to put a lot of sell pressure on that level, right? And they were preparing the dollar for that, right? So, and then GDP numbers came on Thursday, and that was just boom, the nail in the coffin, right? Negative GDP numbers, very weak dollar. So dollar's been falling non-stop. Dollar is another thing I like to trade my scenario analysis in, right, for obvious reasons. And this is the sell that I got into there. Let's go to the 1 hour time frame. Right, this was very clean, stealing candy from a baby. There was nice supply just above this whole area here. Complicated to 5 candles or Kinihashi, whatever makes you happy. You can see the supply on the left, right? So that's why my area of red is the way it is, because I wasn't entirely sure what's cooking. Stop loss there. markets rallied into this original supply, rallied out, came back, and then markets came back in. And that was it. Simple trade for the dollar, right? But where is dollar going right now? I think dollar is going to fall. Well, it is falling, right? Dollar is absolutely falling. This is literally not even a debate. The dollar is being smashed right now. All right, and this fall could end somewhere here, right? So there's a demand-ish area there, and then there's the actual area there. Okay, so that's literally what your one or two main targets. I personally am hoping for some momentum to the downside there, and actually here, and nothing on the 8th. Nothing on the 29th of June area of value, right? So I'm hoping that price continues down like that, something like that, and we shall see how far they are willing to push this pressure on the dollar, right? This temporary pressure on the dollar based on the fact that the governing supply is in charge, but you know, in general, we will resume our dollar print. But right now, despite what you on the news, dollar is weak and might continue to be weak for a little bit longer. Okay, so that's DXY. In terms of trading opportunities, like I said, I would rather wait all the way down there on the day instead of trading opportunities. That's what I would do. Euro pound. This is my scenario analysis video. I don't wanna ruin it, but yeah, let's see. Right, so this was our last trade on this. Our last war room on euro pound was a while back. We took profits, or I hope we took profits, right? I took profits here, by the way. Apologize. Right, so I was out of this trade a while back when markets arrived down here. Right, took profits. So Friday I was not in euro pound. Where to? There's a chance that this could happen. That's chance number one for euro pound, but there's also different possibilities. And maybe just to kind of like recap why we took the sale, because goodness gracious, this is my intraday chart, or used to be anyway. So I know there's a lot of lines and zones in here. Let's just quickly clarify what we're looking for here, right? So euro pound is that chart, by the way, that I really want to fall for thousands and thousands and thousands of pips, and I've been trying. I got burnt a few times trying, right? But this is the destination of where price is going on euro pound, right? It seems to me, while I was trying to sell this thing, you know, preemptively in the last 2 to 3 months or so, and then all of a sudden it pushed a little bit higher, it's finally created a governing supply, right? So that's kind of like the logic, and one can only hope and pray that the month of August might start off a bit bullish and hot. That's why I took profits from that. It's a short-term trade, about 3 or 4 or 5 days or whatever. But one can only hope that what's going to happen is maybe the month of September might wick us into these areas here, and then for the rest of the year we go down. That's kind of like me, but I've noticed, according to my trading journal, last year I made a big mistake like that with pound JPY. Very obsessed about the big picture, to a point where I started to sacrifice the immediate, you know, what price was doing in the shorter time frames, and I ignored the fertility of price, and actually cost me quite a bit of money. So I don't want to do that with euro pound, but geez, this is looking like a beautiful long to positional to swing trade. Very nice, right? A whooping 686 pips, right? It's quite a healthy amount, right? So, and you can imagine the number of selling opportunities that will be created in this chart alone, right? So there's that on the bigger time frame, but on the daily time frame, if I can just bring it back to speed, right? So this is what we have now. So we had a couple of weird things going on in the background, right? So all these supplies, see this supply, I tried to sell there, markets came back down, fine, made a little bit of money. I was surprised that markets just didn't keep dropping. They went back up, took out that supply. I got burnt in one of those trades a while back, etc., right? So I'm just going to remove all this stuff now because it will cause confusion, and I really want you to see Granted, if you're part of the war rooms, then the last time we looked at euro pound, you understand what we're looking at, right? So after all the supplies were taken out by this, and here's the thing about our supply and demand trading. Once an area of value is removed, whether it's a demand or supply, we assume it was not done randomly, but it was done on purpose because the banks no longer have an interest in that area. Therefore, they have removed all the money that was going to make them money in that zone. They removed all the orders. The unfilled orders are gone. So once a supply is done, then it's done, right? So then we start to look for new demands of supplies. And what we did find, you know, and we spoke about this the last time we looked at euro pound, right, was this was going to be very, very interesting, this area here. And if you go to a Kinihashi, right, there was that doji week all you know, there. And you know, it continued to play out, and that's exactly what happened. Great entries on the H1 time frame, etc., etc. So this is what kind of like what we were looking at here. Now, moving forward, we've got a couple of things working for us, right? You've got this, right, as an indication of, right, definite downward movement, and one could argue, although very difficult to prove, but one could argue that there was some type of a very tight, very ugly upward, you know, channel trend line-ish type of situation, and markets have broken out of that, retested to come back down, broken market structure, and so, you know, I shouldn't have closed, technically speaking, but it was just better to kind of like cash in than not cash in. But this might be a very good place to reconsider the playbook when price gets all the way down there. But until price gets down there, it is safe to assume that we should be going back down, right? So what will I be looking at on euro pound? This would be nice. This would be absolutely nice. If markets can come back here to this level, then maybe we can go back down with markets. All right, so once again, I'll show it to you. We are looking to see if we can get some type of pull back to the upside, some type of retracement, and then, you know, start to launch more sell orders all the way down, up there, all the way down there, right? But right now, Mark's created a 365 candle, right? We'll see if there's an imbalance. If there is an imbalance, this is why, once again, war rooms are not enough, because this is where price is today. But during the week, right, things could develop. For example, what if this becomes a 365 candle, or this then becomes a PCP? How do you know about PCPs? Because markets are going to create an imbalance to it, the demand. This is also a possibility, right? So all of a sudden, you're waiting up there, but markets are moving, right? What if they create an appreciation of candle right there? Then all of a sudden, what I've just said is no longer at play. This is now at play. But you don't have the flexibility to move like that because you don't have the comprehensive knowledge. So take the course, link down below, right? So, but these are the two things I'm going to be looking at, right? So Monday, Tuesday, Wednesday, those 3 days are going to be quite important because we do get an imbalance to the downside. Then, you know, one could argue for a buy up to this level, then to sell, or a buy only up to that level, then try and sell. That'll have an imbalance. But again, this could happen this whole week before we even meet by Sunday. So, for example, what happens if markets, you know, come crashing down and remove the demand like that? Then what? Well, you know, then the first supply up there is great. It's a higher supply, but that the probability of that higher supply being used is now no longer, you know, a priority for the markets, because the markets have clearly told us how desperate they want to come down. The governor has a supply. It only needs to make some type of retracement. And I would like to see the retracement make it all the way up there. But this then becomes a possibility if the markets take out this demand, right? And then after that, you know, who knows how low we can go. Really, who knows, right? Who knows how low we can go. Right, so please be of dual minds when it comes to euro pound. You know, look out for that. I apologize, man. We're running out of time. NZDUSD. I'm gonna try and speed up so I can squeeze about 3 or 5 charts. What I can do is do another part 2 when I come back from my small engagement. You know, just to finish the assets that I said we're gonna do. I don't know if I made an announcement what I wanted us to look at today, but maybe I could do a part 1 and a part 2. You guys will let me know, or I'll let you know if that's what I decide. Right, so on the governing time frame, NZDUSD leaving a governing demand. NZD is strong, dollar is weak. That makes sense, right? It correlates. we know that the DXY is falling. So things that start with XX dollar are gaining strength. So when you find an asset gaining strength off a demand, it's 10 times even better, right? It's actually really sweet to watch markets, whether they are correlating positively or correlating negatively, correlate that way, right? So it was a long time ago, but it will be a good time to be long right now. Right now, markets will get to a crossroads sometime in August, if not September, about what to do when we get up here, right? So if I were you, I'll be looking at short-term buys, short to mid-term buys, but when we get to this level here, it is very crucial that we slow down and reflect on price action at that time. Maybe look at COT data that will give us an indication of whether they're cooling their longs, taking profits, increasing their shorts. You want to see what they're doing when price gets there. But right now, the demand is on fire. You know, markets are going up, and we know the dollar has probably got another week or two of decline in it. So, right, it's just only 184 pips anyway, so it's not really a big deal. Let's go to the weekly time frame. All right, complicated 365 candles is a type of supply. You don't know what that is, please check the link down below to do the course. There are multiple types of supplies and demands. This is just one of them. All right, so you can see on the weekly time frame already engaged in a bearish engulfing pattern, but we don't know how strong that will be and how long it will last. You could get those technical, somebody's doing stuff like this, right? And you know, it could work out, right? Then you have to acknowledge that there's a bullish engulfing pattern and that it's actually been tagged, right? So we expect 2 more weeks of an upstream in NZDUSD, right? You could look at it from that particular angle. Nonetheless, this area that I drew on the governing time frame a long time ago should look like this. So I'm going to quickly draw this more accurately, right? So this will look more like this. So this is the higher supply on the governing time frame, all right? And then this is where price is about to hit first, right? So between the two supplies, and this other one is quite dramatically big. So let's just reduce it a bit. And then on the weekly time frame, if you're to narrow down your area of value, it looks something like that. So also, just space between these two, right? And you've got a nice value gap there, right? So I would watch for this. There's definitely nothing to do here for me personally. I'm not going to do anything here. I'm not going to try and sell at this level when I know I'm so close to a governing demand. There's a weekly demand that was just formed last week in this particular area, right? So I'm not going to go against the grain. I'm not going to think I'm smarter than smart money, right? There's a lot of bullishness in this chart right now, right? So I'm going to ignore the first supply and then see what's cutting, when we get up there, right? In fact, if there are opportunities to buy, I might even buy. And this is what it looks like on the daily, right? Too choppy, I switched candles to a Kinihashi just to get a better read of what's going on, right? So you can see on my Kinihashi candlesticks, I actually got, I guess, creation of a PCP. It's not yet fully ready. And one would argue that on the daily time frame somewhere here, it doesn't, I thought markets had broken that supply, but it doesn't look broken, but it looks maximized. It looks very much maximized, but let's actually just get a clean confirmation. Okay, it's gone, right? So you can see this supply is gone, right? This supply is gone, it's been removed, okay? And then markets probably went for the next higher thing, breaking that supply and tagging something a little bit higher. Right, so there's still a supply play, but the first one is broken. That's an indication of some upward momentum. So now we're targeting this doji candle, right, and this long wick, and look at that bearish engulfing next to it, right? So it's a bearish engulfing candle, but it was earmarked by an indecision candle, right, which is actually quite cool, right? So on the daily time frame, there's this really significant supply here, where markets had to stop on Friday. And the question is, where will markets go? Right, there's nowhere to buy, honestly speaking, unless if this particular supply that we're talking about, if this particular supply does this for me, I would appreciate it. So if over the next week or so pulls price down to somewhere there, then I'd absolutely be a big buyer in this market as well, all the way to the top of the weekly supply. right? So if this could happen, I'm not saying it will, but if this could happen, great. But right now, there's nothing to do. You know, you could wait for an imbalance, so completely take out this supply, right? But you need to know how to do these things outside of the war room. And then when markets come back down, then maybe you can take the buy there. All right, so that could work. Only after another candlestick to give us a full imbalance, taking out a supply, that type of confirmation could allow for markets to, you know, do what they want to the upside, right? But there are only two upside moves. I really would prefer a much more lower pullback. Honestly, that's just me. But time will tell. Okay, that's NZDUSD, EURAUD, right? I'm so happy to share this because I really was becoming so impatient. I wanted to put a penny in order before you guys see this chart, right? So this is the daily. Let's move to the government. So EURAUD is still weak, but it's created for us finally as the month of August comes to an end. Today's the last day of August, so Friday was the last day of trading in August. That's why you have to wait for this thing. But you can see markets finally ended Friday with a bearish engulfing candle, right? So I can remove all these long time ago levels where I last sold. It's just going to confuse us. But now we can confirm that we finally have a new sell level on EURUSD, all right? And now all we have to do is to wait to use it. We have to wait to use it because patience pays. Patience pays. Timing is everything, all right, in the markets, in life, to be honest with you. But here is a good place to park, right? Right, so watch out for that. So for me, I believe we've got a fresh supply. I believe we've still got a long way down. So again, new month of August, I hopefully expect to see a pullback as soon as possible. I want to see price pulling back into this area. If you're a cowboy, then you want to buy up. I'm not a cowboy. I don't like taking unnecessary risks. I'm already in too many risks in life. I've got investments. I am a trader. I'm in a long-term relationship. Everything in life is risk. Why should I take unnecessary risks, right? But if you like unnecessary risks, then yeah, I'm a black man in Africa, in South Africa. It's just too much risks already, man. Too much risk for my life. But yeah, if you are interested, you want to find a buy setup because it's going to be a pullback anyways, right? But I'll definitely be looking to start selling from this level on the weekly, daily, governing time frame, first of all, yeah, and it's going to look this tight on the daily. Okay, so you can see this demand on Friday was removed, right, and then markets gave an indecision candle, which actually, generally speaking, by demand would mark a reversal, right, a market reversal, but it's a tricky one because they broke the demand. So I'm not buying. Like I said, I've got too much risk already in my life right now, literally. So I have no interest in buying this area. But if there is some type of beautiful pullback, you know, and it's really going to have to work its butt out, really going to have to work its butt out. And the reason for that is because they are, you know, potentially sell orders here that could, you know, change the tide. So instead of markets coming all the way to the top like this, where we expected, markets could come here. And I actually won't co-sign that. So I won't be in that trade, but it could happen, but I won't be in that trade because I really believe it would make more sense for price to fill those higher levels of supply. So if I could get what I want and just be patient for it, that would be great. Right, but there should be some type of movement to the upside sooner than later. We'll see how the new month starts, right? But once again, the same pattern I tried to show you on Bitcoin, there's things. Be careful of them because and listen to what I'm saying and how the textbooks, you know, say you should trade them, right? This upward channels always break, always break, always break. It's just a part of life, you know. It's something that you just need to look out for. Right, so that's EURAUD done. And also my time for at least part one, but let me just leave you with some silver, XAGUSD. That's the next chart I wanted to do. Silver. Yeah. Right, so I do know I took a stop loss hit on this first demand, but the second one was triggered. And it's just, I really should not have been on the first one. Remember, buy low. So just for everyone to see, we spoke about silver, guys. Please note, we spoke about, you know, the nice thing about war rooms is these charts become so boring because when you mark them properly, you actually get to see. But there it is here, War Room, no, that's actually, yeah, War Room 68. We spoke about silver. War Room 68, I drew those areas of value for you. We spoke about silver. We spoke about silver again before that. I just can't find where it is, but somewhere along the line, we keep bringing this up. And now price arrived. So I got tagged in and I had a stop loss, but lucky enough, I'd also put my second pin in order on these lower demands here. And now markets are rallying, and you can see one day I'm going to tell you that I told you where to sell, because you can see I've already marked my charts. I've already put my proximal lines, which is my entry points, in there, and we have an interesting, debate going on the floor, whether this area of value was mitigated or not, and whether when price arrives, if it arrives here, that be a fresh touch or a retest. And obviously, the possibility of the fact that I might need to consider taking profits when price gets here. Right? So by Wednesday or so, I might have to get out of this trade. And the reason being is, what happens if price turns me there, right? Then to get a better perspective, Hakimi Hashi, and that's why that's a big deal, right? You can see for a fact that markets have definitely got unfilled orders in this area. So if you're in this buy with me, have your sell orders waiting, but definitely take profit here, right? So it's still a good enough, profit margin, there. Right, and then this particular area here that's quite complicated, you can see that markets will feel this zone here, right? Especially if you use a Kini-Hashi candlesticks, but it's quite tricky when you're using normal candlesticks, because then your area of competition has been met, but your area of value has not. Area of competition is where there's going to be the most competition to get those orders filled in the quickest time, and some orders get left behind, right? So we refer to our area of competition. Right, but for now, I guess one step at a time, I'm going to take my silver, take profit there. Now, the governing time frames, to do a top-down analysis on silver, to remind everyone, we were happy to sell silver, and sometimes we got in, sometimes we missed entries, blah, blah, blah. Silver has not yet arrived at a governing time frame that would suggest or persuade us into wanting to become buyers right now. I'm still a long-term seller in the silver market. It's just that this buy was quite obvious and I couldn't miss out on it due to the weekly time frame, right? But there's still a little bit more game to the downside. If you look on the weekly time frame, that area that I said I'm taking profit on has no confluence, right? Markets only start, heating up slightly above, which is kind of like a very weird setup. I find silver, the silver chart or this phase in silver to be quite weird, because it's very choppy to decide really what is the right supply or demand level there. There's this bearish engulfing pattern because it was filled. There's this new one here. I don't know if you guys can see it, but I'll make it big for you so you can see it. Right? There's another bearish engulfing pattern, or rather a supply, should I say, just above there. This. Right, and I could make the argument that what is the better one. You can see there's a fresh touch, but it can be good for a retest. I could make that argument. So once again, because of both these reasons, I have to take profit in these areas. What I'm just conflicted with is, will I sell here or wait to sell up there? And I can't answer that question today because I haven't really decided. So what I want to do is by Wednesday-ish, I should go through the COT for silver and then see where their positions are, because I haven't looked at silver data in a very long time. If I feel like they're about to start pulling off their longs, or they've already pulled off their longs, then I might be inclined to sell here. But if I see that their longs are still crazy aggressive, meaning they need 1 more or 2 more weeks of buying pressure up there, then I will still take profit here to be safe, but not sell there. All right. So yeah, I hope that makes sense for silver. Ladies and gentlemen, if I am to get this video to you on time, I unfortunately have to end the war room. Let's call it part 1 here. There will be a part 2 again. Someone say take a break, do other things, and then come back and make a part 2. You're more refreshed. So I definitely am forced to take that advice today. This feels like good advice. But just to recap, if you're still here, please don't forget to share, like, and subscribe. Especially subscribe, because a lot of stuff is going to start happening on the channel. That's number 1. Number 2, we just looked at the following charts. Right? I just want to make this clear. Right. So this was part one. We've just done all of this hard work together, and I've given you a market sentiment at the very beginning of the video, explaining to you the dynamics of the FOMC, etc., etc., etc. And I hope you really enjoyed that and respected that, because I think it's very important to understand this. Right. So in the next video, I would like to encourage you to watch it. It will drop today. I just don't know when. Right. Or first thing tomorrow, Monday, all right? But please look out for this. I'm gonna finish the list, right? So these are the last few charts that I'd like to look at in part two of the war room. Maybe I can find one or two other indices to look at, but ideally NZD CAD, gold, Euro USD, Euro Swiss franc, NZD Swiss franc, NZD JPY, Euro JPY, Euro NZD CAD is what's going to be in part two. In the whole thing, holding our trading together is what you do every day to become better. You got to do something, right? Number one, take the course. Number two, apply the information. It's very important. Number three, the podcast is back to work on your mind, because if you're going into the markets looking for opportunity and approaching it from a place of lack, you will leave money than take money out, right? You gotta fix your mindset. So please look out for that. And yeah, I wish you guys well. 365, shake my hand. If I didn't say it earlier on, I would like to say it right now. Please shake my hand. Thank you so much for watching. Let me know what parts of the video you liked, didn't like, do like the video, and I'll see you in part two in a couple of hours. Cheers, everybody. God bless.